This is our Forex blog for September 23, 2011. And like most days, we really want to buy the strongest currencies versus the weakest and sell the weakest versus the strongest. We have released a new tool, in last night's update, which on a quote sheet will show you which currencies have the closest support or closest resistance or farthest away support or farthest away resistance. In other words, if you find a currency that's strong, you don't want to necessarily buy it unless it has room to run. What good does a couple $100,000 Ferrari do if you're driving it in rush hour traffic in the LA freeways? You're going to be going 1 mile an hour, just like the guy in the tiniest smart car, the least powered, car in the world. There's no benefit of having that Ferrari. And really the same thing comes in trading. So when you right click on a quote sheet or hot list, add columns, there's a bunch of new ones here. 1 resistance, 2, 3, and 4. And the only thing that the number means is how many different levels it shows you. If I'm going to be using 3 support and 3 resistance. It shows the closest support and resistance, the next closest support resistance, and the next closest. So it shows 3 levels of support and 3 levels of resistance, all on this line. So in the euro dollar, support is 14 pips away, the previous week's low, and underneath that, and by another 20 pips, is the daily pivot, and 50 pips below that is the next weekly pivot. Resistance is 14 pips up, but if it can break that, it's got another 20 pips to run. Daily pivots really aren't the strongest support resistance, so it's pretty likely to break that. And the next level is 37 pips away. So if it breaks that daily midpoint plus right above the pivot, it has a good potential to move 39 pips. So in analyzing what your risk versus reward is, if the euro dollar is strong right now and it pulls back and there's support, another way you could use this is if this was a currency that was strong, you could look at it and say, I got support 11 pips below me. I can put my stop right underneath the previous week's low, which is a very strong level of support. And it's likely to go 16 pips, and if it breaks through that, it can go 37. So I can risk 10 pips and probably have at least a 50% chance of 35 to 40 pips. And if it doesn't go through the 17 pip away resistance, at least I can make 16 to 17 pips. And you can also sort these. You can put multiple currencies up here, and it will allow you to sort which ones. This one has support that's 57 pips below it. So if you're looking to sell this, it has the potential to move down 57 pips. That's a considerable number of pips. Sometimes the support and resistance areas are going to be close, and sometimes they're going to be farther away. You want to take trades in the direction of the trend where the support or resistance is the farthest away. If you have 3 currencies that are all strong, you might want to buy 2 of the 3. Most people can't watch 3 currencies at once. Buy the 2 that have either the strongest trend, or hopefully the 2 that have the strongest trend with the next area of major buying and selling the farthest distance away. So this is a new tool. I'm going to go over it more in our regular class. If you're wondering what that sound is and why I'm out of breath, I have a treadmill desk, and I'm walking 1.2 miles an hour up a 3-degree slope. So, plus I had worked out and swam earlier today, so I'm a little bit out of breath. All right, so looking at the currency meter, this shows all the different currencies, dollar, yen, euro, and compares them against all the rest of them on a bar-by-bar basis, the real-time strength. Anything at or above the 80 level is extreme strength or weakness. Underneath that, I had the intermediate intraday trend, which is approximately 30 minutes to an hour and a half time frame trend. It really varies because it's made up of many different tools and only works live. And underneath that, we had the daily, weekly, monthly. So the dollar, does have an uptrend on pretty much on all the time frames. Here you had about 2 hours of weakness. Some strength came back in, and at 6, a lot of strength came in. Same thing with the yen. The weakest ones, across the board are the Australian, and had 2 or 3 hours of strength. The weakness came back. It's pretty safe to assume after an hour to 2 of strength that when the longer term trend's down, if you see it, without that much strength, you could have looked for a sell in it here, and that didn't work. You might have a loss. And then the strength disappears here. You can assume some weakness will come in. The second time, the weakness lasted for 3 hours. So from about 5 to 8, you could have traded this against one of the strongest ones. And it appears that the yen was stronger than the dollar. So from 5 to 8, why not sell the Australian yen. It's that simple. That's how you use the currency meter. Here's 5 o'clock, right? And notice it fell from 75 all the way down to 73, 75. It fell 175 pips. Our Intella stops, you know, the first trade here, locked in close to 60 pips. You know, it looks like you had maybe a small loss or small win there, and then a small win at the bottom here. I did leave my other workspace loaded with the build your own trend. This one only works live. And figures I don't have the Australian on here. I do have the Australian dollar. I believe the dollar was also strong during that time, so we'll take a look at this one too. From 5 to 8. Strong dollar, weak Australian. And you can see using this, and this is a tool that allows you to build your own statistical trend strength using all of our best tools in whatever time frames you want. You can weight each one of them. This only works live because it's impossible to combine multiple time frames, especially on a range chart. This is 5 pips per bar, which is a lot easier to trade than on the 2-minute, 3, 5, 10, 15, whatever. So you had an uptrend here, 5, it became weak, starts going down. You can see almost a minus 80 weakness here. On this counter trend move up, there's about 30% less strength than weakness. And really, that's all you're looking to do. Sell it with your stop right above the high, and it pretty much just trends down. You might have got out of it somewhere down here near 60, and you made about 60 pips. Notice extreme weakness. If you get a counter trend move up, you might have shorted this right here. You would have lost maybe 8 pips. You shorted it again, it came back down. Maybe you made those 8 pips back. You know, those 2 trades canceled out. You already had 60 pips before. You know, again, the market is showing extreme weakness. It failed to break out right here, and you go short again with your Fibonacci area as your likely profit target. And I probably would have got out of half of my trade here, and I'm looking to get out of the second half to 1.618. So that's your profit would have been halfway in between these at 82. You short this at 24. So you made about 40 pips on that trade. So you made 60 pips, lost 8, made 8, made, I just forgot here, 40 more. Very high odds using the build your own trend candles, and you can test hundreds of different combinations and find ones that suit your own style. If you like to get into a trend and hold it for hours and hours or days, then use longer time frame data in calculating the statistics, and it's going to not flip back and forth as much. If you're an intraday trader like me and a lot of our traders, you want to look at the moves up compared to the moves down, and if the down moves have a lot more weakness than the up moves, which you can see right here, started it, and again here and here, those trends tend to continue. It's not rocket science. Currencies tend to trend, and the strongest currencies tend to trend the most. Here's the pound. It was extremely strong today. The weekly monthly trend aren't quite as strong as the dollar and the yen, but the Australian and the New Zealand and the CAD and the euro would have been a good one to sell against that strong pound. Let's just bring this up. I didn't have any of these currencies up here. We'll start with the pound Australian. You'll notice that this probably went up 150 to 200 pips today. Let me bring this up here. Yeah, okay, it did. It went up 200 pips from the low. All right. Especially even if you bought this breakout here, 57.75, it went up 125 pips, and you would have had this nice little pullback right here. Notice this on a 6 pips per bar trade chart also would give you a lower risk and higher win type of trades. Hopefully, sometimes when you leave E-signal running for a few days, it has issues. Let's see here. Okay, so this thing broke out, and on a range chart, you really can see the pullbacks very nicely. You just wait for a pullback, and if it goes sideways, I wait for it to break out over the sideways, level. But you can see that went from 58.10 up to 50. You get another beautiful pullback, and you would have bought again right here when it broke out of that lower range, went up 20 pips. Pullback here, went up, 40 or 50 pips. Very high odds trade. Again, the New Zealand was weak too, so you can see that trended up. The euro was weak, so the euro pound is going to go down, as you can see, straight down. And this one doesn't typically move as many pips per bar. You might use the 5 pips per bar compare the 5-minute chart you have here to what's about to come up, and you'll see that it's very nice trading with a range bar chart. Here you have a downtrend, decent pullback. You might have went short here with your stop just a few pips above the high. You might have made 10 or 15 pips there. Got short again right here. Your stop right above the high. Went your way a few pips, came back, didn't stop you out, and then just took off. Most of us, and I highly recommend exiting half when it hits the first fib target right here. And then you just simply put your stop right above that little sideways range. And the first sign of it reversing back up, sometimes it goes to the 1.618 and reverses. This one went down a little bit. You would have got out of the second half here around 21. So your average exit would have been somewhere around 30. Short here at 65. You made 35 pips on this. So the currency meter really does find the greatest trades. And when you have intensities at and above the 80 level on the way up, and the pullbacks, for the most part, don't even hit the 80 level and are shorter in time. If you have an hour and a half, 2 hours, 3 hours up, and only 3 bars of red or 5 bars, and they're low intensity, that trend strength is likely to resume. If the daily, weekly, and monthly is also strongly up, like it is in the dollar and the yen, it even increases your odds even more. Let's look at the pound CAD. Strong pound, weak CAD. Obviously this one's going to go up too. I should have just put a 5-minute one on here to start with. And you can see, up. This is the first sign of its real strength. Pulled back, you buy, and it went up from 58.50, almost 100 pips. It went up 100 pips. So you're obviously never going to catch the full 100 pips, but you certainly can catch 10 to 30 pips here, 30 pips there, 50 pips maybe on this pullback, 20 pips. There's a ton of pips to be made, and instead of trading, possibly the currency that's not likely to move, like the Australian versus the New Zealand, 2 weak currencies you want to avoid like the plague.